They're saying it was a compromised account. That looks to be the base case, but also whoever compromised that and wrote the tweet and the quote from Gensler and the image in there, you did a really good job. If you're listening to this and you compromise that, you did a pretty good job at spoofing the SEC.
This content is brought to you by Uphold, which is a great crypto platform that I've been using since 2018. Uphold has all the top cryptocurrencies, Bitcoin, and all the altcoins. In fact, they have 260 plus cryptocurrencies on their platform. You can also trade precious metals, stablecoins, and 37 fiat currencies. In addition, they are available in over 150 countries. And this platform is fully reserved. They do audits, so you can trust that your funds are safe. No commingling, no lending out your funds. If you'd like to learn more about Uphold, please visit the link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is James Seyffart, who is an ETF research analyst at Bloomberg Intelligence. And James, we are recording this on Tuesday, January 9th, after the major fake out from the SEC. What are your initial thoughts on that news?
Yeah, I mean, I debated deleting my tweet because I have alerts set on for that account, so I saw it immediately and I was like, no way. I couldn't believe what I was reading, and I went to the account. I'm like, am I sure this is the right account? I was like, I obviously have the alerts turned on for the right account. So I tweeted breaking, and then I caveated it with, I would not have expected them to break the news this way. This is surprising. And then I said, my follow-up tweet, I'm waiting for the 19B4s and S1s. And I went right to the website, even before I tweeted, to see if the 19B4s were up, which is like there's a site there where you can see them posted when they're approved. And the site basically wasn't working for me. So I was like, oh, maybe it is, maybe they dropped and I missed it. So I just went out there, but yeah, just an absolute rug pull. Um,
Yeah, because
Brutal.
usually
They're saying it was a compromised account. That looks to be the base case, but also whoever compromised that and wrote the tweet and the quote from Gensler and the image in there, you did a really good job. If you're listening to this and you compromise that, you did a pretty good job at spoofing the SEC. That said, I think you would have made more money if you said that they were denied and gave a reason for denial. It would have sent things going a lot lower versus only going up by like $1,200.
Yeah, exactly. And to your point, the SEC would usually do a big PR push, right? It'll be broken by Bloomberg, you guys, or whoever it is, where that news wouldn't just come out on a tweet and it would be on the website, like you're saying. Um, there's two things here, though, I'm thinking about that tweet. One, is it indeed that someone compromised that, or was that a scheduled tweet that someone screwed up and published ahead of time? Which one do you
So
think
th
is likely?
So that was my thinking as well, but it also apparently that you can see on the likes on that account, it liked a bunch of weird degen like crypto type stuff. So it might have indeed been compromised. My initial thought was this wasn't a compromise. This looks like a tweet that was sitting in drafts that was supposed to go out tomorrow evening versus this evening. Because what we were expecting, to be clear, is that we didn't expect approvals to come till after market close tomorrow. That was my base case, and we were going to see some movements on the S1. So there's a few things that need to happen. We expected most of that to happen, yes, tomorrow, and a lot of it after market close. So when it happened now, I was caught off guard, to be quite frank.
Right, because I saw CNBC had reported on Monday that sources were saying approvals coming on Wednesday, trading starting on Thursday, and it seemed like a bunch of other filers had validated this, Jen Van Eck and a bunch of other folks. But what do you think happens tomorrow, James? I mean, this is obviously a mess. Do you think the SEC, balks and they're like, you know what, we got to step back for a second because this whole thing is just messy?
Uh, I don't know.
Mm.
Um,
I know it's a hard question.
I don't know. I mean, at one point, this isn't at one end, this isn't like anything that these issuers have done or the investors in this. This is somebody who got control of a theoretically compromised account. That said, it certainly is not a good look, I guess. I don't know. I can't imagine the SEC writing up a denial letter, and I have to assume they likely have the approval letters written up based on everything we've seen. So I can't imagine they're going to go through and change the entire, these are long letters that they write, and change it to denial language, and one of those denials be because the SEC Twitter account was compromised, or X account, whatever you want to say. So I don't think it'll have an impact, but yeah.
Well, yeah, we'll have to wait and see. Nevertheless, we see that a lot of the filers, they got their S1s and everything updated, submitted by the deadline. Many were cutting fees, and it seems there's a competition around the fees. What are your thoughts on the fee breakdown and the adjustments that were made? I saw Grayscale had the highest. Is that a smart move on their part?
On Grayscale's part.
Hmm.
Uh, I don't know. I think they went from 2% to 1.5% or 150 basis points, which is really high to me. That's really high for the ETF industry. I would if they're doing what I think they're doing, and they're just gonna lean on their market lead and the assets and liquidity that they've built up in that ticker. It makes sense, but I probably, if I were in their shoes, would have gone at least below 1% on this. I have some theories on what they're planning to do. I mean, again, they could theoretically cut fees still a little bit further, but it doesn't look like that's the plan. But yeah, I don't know. I wouldn't have left it that high. It seems like a little bit of a disservice to their current investors. They've been saying they're going to cut fees and all this stuff, and they only dropped. They kept their word, obviously. They went from 2% to 1.5%, but it's still that's a really steep fee.
Now, we see some other folks adjusted their fees as well. Some were saying, like for example, Caitlin Long was, saying, "Hey, this looks a little bit weird. How are they going to make money?" Do you think it's just in the opening of the gate that they're going to keep the fees low and maybe they can scale it over time to maybe be more profitable? What are your thoughts?
100%. Yeah, I mean, you got to realize in the ETF industry, like some of these guys might not be expecting to make any profit on this. That's what Caitlin doesn't understand. The ETF industry is extremely low margin for the most part on the lower ends of AUM. So if you can get to tens of billions of dollars, they can afford to offer to offer these products at those fees, right? So it's all about a scale thing, and they need to get off the ground first, and they want to get to that asset and liquidity scale as quickly as possible in order to be profitable. But all these guys are offering 0% fees to start off. Like it's not because they're going to do some super sketchy things with the Bitcoin or what have you. They're doing it because they're trying to compete in the ETF terror zone and what advisors are used to competing at and what they're used to getting. And that's just how things operate in the ETF world. It's not that they're gonna find other ways to eke out returns or do sketchy stuff. This is just them competing. And you could honestly, some of these guys are probably going to be losing money on these things for a while. We know for a fact they have fee waivers on these things for 6 months if they when they launch. Those people are going to be de facto losing money. It's a marketing ploy. They're trying to get people in, so the long term it can be a profitable investment for them.
Mm. So James, hard question for you. Given that, we're going to see some marketing after these are approved, at the end of the year, what do you think will be the top three ETFs in the market?
Oh, I don't want to do that. I don't want to pick favorites because I talk to people at all these firms.
Sure.
I mean, I'll just give you I mean, Grayscale is going to be really hard to defeat because they're $30 billion in assets right now. They are extremely liquid in GBTC, and liquidity is hard to steal. So traders are still going to trade GBTC most likely, and it might be a slow bleed from that product over time because the fees are so high. And then you can't count BlackRock and Fidelity out. Obviously, those are huge names, and we'll see what happens. But you also have a lot of like crypto native issuers and people partnering with crypto native issuers. Invesco's a large firm; they're partnering with Galaxy. You have Bitwise and Valkyrie and Hashdex who have done nothing, and they're focusing on the crypto industry specifically. You have Van Eck that sits in the middle, kind of. There's a whole bunch of different people. Then you have Franklin, who's been talking of doing a lot of things with blockchain, haven't really done much on the ETF front, but they're coming in, they're competing with the heavy fee. And you also have Wisdom Tree, which can't be counted out on anything. I mean, these are all issuers that have their own ways, and they're trying to get their own basically client base, and some of them have their own distribution network. So it might not necessarily be that, yeah, some of these guys aren't going to compete at the top level and gather like all the billions of dollars that could potentially flow into these things. But if they can get a couple $100 million in assets, and maybe it's slightly profitable or even like at least a little bit more than break even, right? That could be beneficial because, yeah, maybe they wouldn't do that if but it has this offering is in their lineup when they go to see advisors and other clients, right? So it's not always about these need to make a lot of money for us. Sometimes it's just like we need to make sure we have something that we can slot into this advisor's need or these different advisors' needs. So if some other wholesaler is coming into the office and saying, here we have all these and we have a Bitcoin ETF, and then you come in and they're like, yeah, we're thinking about going to the Bitcoin ETF and you don't have it, like that's something that a lot of these issuers that have distribution don't want to deal with. But then it's also a pro for some of the more specific guys that I mentioned, like Valkyrie, Hashdex, Bitwise, those type of people. They're focusing on one thing and one thing only, and that's crypto focused ETFs. And they can go in and they don't have to worry about selling any equity or bond ETFs. They don't have to worry about relationships on other things because they're solely focused on talking to these people about these asset classes. So everyone's going to try their own way to win. We've already seen it with Valkyrie and Van Eck. Their tickers are HODL, HODL, and Burr, BRRR for like money printer go Burr. Those are definitely a little more retail oriented, retail focused. That they could get things going there, a little more viral, meme sensation type stuff. So, and then we have some other like real, like basic, normal FBTC, IBIT, like things like that are just super boring. That is more like boomer-ish, I guess, if you will. The advisor crowd might be more attracted to those. Now, obviously, tickers aren't everything, but they do have an impact. So, everyone's going to try different channels and different marketing techniques and different avenues to try and get some significant assets in these things. So I don't want to pick favorites. Like I said, I don't want to say that, but I do think a few of these are likely going to have to close. Like this is a winner take most type situation where we'll have a couple ETFs right at the top. But there's likely to be some of these that are going to have to close in the next 12 to 24 months, I think.
Now, speaking of active participants, I read some news reports that JPMorgan may participate with Grayscale, and you have Jane Street, Goldman Sachs, and so forth. How important are those partnerships and those active participants, especially with the likes of JPMorgan?
Yeah. They're standard for all ETFs, right? So all these guys that are coming in as the authorized participants, for the most part, I've seen them on as authorized participants in other ETFs. I think part of the benefit here is that they're doing the cash create versus the in-kind create model. So some of these brokers feel more comfortable doing it. So the cash create model likely brings more authorized participants into the fray and market makers willing to deal with these things and trade them, keep the bid-ask spreads tight, more competition from the broader market. So that's a positive thing, but it's all these big banks. It's just a sign that this is going to be go into the plumbing infrastructure of ETFs and Wall Street essentially. So these things are going to trade extremely tight. The bid-ask spread will be very, very tight, which you don't get on most crypto exchanges with these things. And many times you can't really figure out what the bid-ask spread is. And then there will be no commissions for the most part. When people buy ETFs, they're buying them on platforms without commissions. So these things are going to be extremely efficient for getting exposure to the underlying asset if and when they list.
Now, question for you, if you could take us behind the scenes, do you believe some of these filers have already started accumulating Bitcoin? We know Grayscale has their trust; they already have some Bitcoin. But let's say the new players to the game, let's say BlackRock, right? Or do you believe they're going to buy, as the ETFs grow and there's demand?
We're getting into a window where it might be the case that these ETFs are starting to buy if we are indeed correct. You talked about like CNBC and other stuff. We've been reporting the same stuff. We're hearing the same stuff from our sources. We were expecting approval on Wednesday, listing on Thursday, and we were expecting to do a basically breakdown of what happened on Thursday after market close on Thursday. So this is what our whole plan was. So that tweet kind of threw everything off. I'm sorry, I forgot exactly what the first part of the question was.
Oh, if do you believe some of these filers have already started accumulating?
Oh, yes. Okay. Sorry. So typically what happens is one, there's two things here. One, I mentioned already, they can't do in kind. In kind is where they would hand the Bitcoin over and get the shares of the ETF or vice versa. So they can only do cash. So the only thing that can go in or out of this trust is cash.
Mm.
So they can put cash into the thing, but unless they're actually out there buying Bitcoin, they can't just put Bitcoin in there. So they can't be buying Bitcoin for another area of their business and then putting it into the ETF. That's not possible here because there is no in-kind creation, right? So it's possible if you would, I would think they're likely to start buying tomorrow, would be my guess, if we are correct and they do begin trading on Thursday. That said, that's going to be for seed capital. It's not going to be that much money. A lot of the money we think there'll be a lot of these issuers have money waiting in the wings to start buying this thing on day one and day two because like I said, it matters if you can be the first one, if you can be at the top of the heap here in these Bitcoin ETFs, you can become the most liquid, you get the largest assets. It's like a snowball rolling downhill, right? It'll grow and grow and grow and grow. So if these what these issuers likely do is they're going to seed with some certain amount of capital, and then they want people to like show on-screen liquidity. So it shows up as flows, it shows up as increases in assets, things like that. So I think most of the buying, if there is a significant amount of capital waiting in the wings here, would come on Thursday and Friday if we're correct on these approval dates. But yeah, they have not, as far as I know, and as far as I believe, they have not been buying because they cannot buy and then put into the ETF.
Ah, interesting. Yeah, that's a question I know a lot of people have because we don't know how I don't know much about ETFs and the inner workings behind the scenes, but that's very interesting. Now, we saw Bitwise and Hashdex and a bunch of folks put out uh, ads and kind of testing the waters. Are you anticipating we will see maybe a Bitcoin spot ETF ad at the Super Bowl? And we see a ramp up of advertising throughout the year?
I don't know. I'm gonna say maybe, but probably not. I
Mm.
mean, the last time we saw any crypto related advertising at the Super Bowl, we all know what happened after that. So
Mm.
I don't know. It's definitely possible. I wouldn't put it past BlackRock or somebody like that. Maybe Invesco doing it. They have the wherewithal and the assets to do that if they really wanted to buy in. But I'm not counting on it. I would say base case no, but I'm not counting it out completely.
Mm. Final question here for you today. I believe he was on Bloomberg. Stephen McClurg, Valkyrie Chief Investment Officer, he made a statement that look, after this Bitcoin spot ETF is approved, later down the line, we could see an Ethereum or a XRP ETF. Do you think that happens sometime later this year? Given that we're headed into that bull market.
I knew this question was coming from you because I because we always talk about this. Look, I think so I've been telling everyone the way I view it is Bitcoin and Ethereum are off on a pedestal on their own for possibly getting approved this year. The only remote possibility would, I guess, be XRP, but I think that's not happening this year because unless the court case is completely done, right? There's still they're still challenging this in court, right? It's not completely done. The SEC is literally fighting against Ripple in court. So, and not to mention part of the reason why I think we'll get Ethereum and why I think we're getting Bitcoin. Hopefully that tweet doesn't change anything. And why I think we're getting Ethereum is that we have futures already trading on the CME that are regulated by the CFTC, which is a regulated market. And then we have the futures ETFs, which also are kind of like pushing this thing along as well. So we don't have any of that for Ripple. So like I would take like way, way, way under on 2024, maybe 2025, but we get regulatory clarity out of the courts on how XRP or Ripple is going to be handled. But yeah, I think no shot in 2024 personally, but I guess crazier things are happening. I haven't, to be honest, been paying super close attention to what's going on that front. But what I've been saying for the most part is anything other than Bitcoin or Ethereum, we likely need a little act of Congress or like a change of administration or some serious big time court decision to get these things across the line to get any other sort of asset class or digital asset into a Bitcoin wrapper or into an ETF wrapper. Geez, I'm sorry.
No, no, great point. And I remember you mentioned that it has that usually the process has been the features get approved first, then. So that's a great point. I remember you mentioned that last time. So man, are you gonna have a drink tonight with today's craziness and hopefully tomorrow is better?
I don't know. I'm gonna log off of Twitter for a while and just not look at it. I don't even want to see what people are saying on there. The other thing that I have been saying we need futures. There is nothing that says we have to absolutely have a futures ETF or futures to be trading. I just think that that's right now, that's the tried, true, and tested way that you can get one of these things through the SEC's door. So yeah, I don't want to say like, oh my God, this is the only way that you can happen. So until we have these things, no, but most likely that's what you're going to need. That said, I don't think I'm going to have a drink. I'm going to be, I'll be in New York City the next 2 days doing a whole bunch of stuff, with TV and radio and trying to get all this stuff down and cover what's happening. So, I'm gonna relax tonight and do a little bit of nothing.
Oh yeah, that makes sense, man. Well, hopefully tomorrow we get better official true news of the approval and the rest of the week is awesome with these ETFs starting to trade. But thank you so much, James. I appreciate your insights.
Yeah, thanks for having me, Tony. This was fun.